divisions. One is pharmacy division, other one is 24/7 division. This pharmacy division is supplying pharmacy products to its holding company, 100% holding
Actually,
company.
I'll just interrupt for maybe you have to start again because I just started the recording. Just this
Yes,
portion of the case study. Yeah.
yes. So to set a brief backdrop, this Confused Private Limited is a 100% subsidiary of Totally Confused Private Limited. And this company has two divisions. One is pharmacy division, other one is 24/7 division. This pharmacy division, it supplies all its pharmaceutical products to this 100% holding company. And 24/7 division, which is a centralized division, which has been organized to make sure they provide the online platform to promote the sales of the Totally Confused Private Limited to the holding company. This Confused Private Limited is going to supply the pharma products to holding company. Holding company, it is going to distribute across India. It has 21 registrations. These are the facts. Now, in this backdrop, what I did, I took some of the compliance issues and litigation issues. In compliance issues, we discussed about 4 aspects of it. One is, whether matching is mandatory. That is the first issue we discussed. Whether the expense which is pertaining to that particular registration, can it be distributed across all branches? That is the second issue we discussed. Then the third issue is what we were, and also what if the ineligible credits are not distributed? What will be the ramifications? So these were the major discussions we did in the previous session. Now moving on to this, from where I left, it is point number 5. So what they have done for import of service, see what they have done, they have imported the formulas, secret formulas and patents from a foreign company. And it is an import of service. They are paying the tax under RCM. The company, instead of distributing through ISD, it prefers to do a cross charge of that particular tax, whatever they have paid it under RCM. And the peculiar point here is that while they are distributing the credit, the manner of distribution, they are religiously complying with Rule 39. That is the valuation, whatever it is done, the pro rata distribution. They are complying with Rule 39 and making the distribution. See, the company is not distributing through ISD registration. It is doing a cross charge. However, while doing a cross charge, the distribution is in accordance with Rule 39. Now, the point is, the interesting aspect here, which I want to ask. What if the company punches this particular credit, the recipient company punches the credit in table 4A5, all other ITs? Will it have any ramifications? That is my question. Open for discussion, friends. Because they have followed the ISD method of distribution, but they are punching it in 4A5. Will it have any ramifications?
So I'm assuming they are not having ISD registration, right? In this case.
Sorry?
They are not having ISD registration. The company
yes.
in this case is not having ISD.
No, they have the ISD registration here.
Okay. Okay.
But the point is, they are not preferring to distribute through ISD. They are preferring to do a cross charge, given the chance or given the opportunity.
See, earlier, before ISD was not mandatory, the instructions of the GSTN portal, if you see regarding the return filing, they maintain very clearly that RCM cannot be distributed by way of ISD. I'm talking about before amendment. Now they have made it very clear that RCM is also required to be distributed by way of ISD. So correct. if going as per the amendment and the intention of the law, if they have an ISD and if they are distributing import of service by way of cross-charge mechanism, it may seem to be a procedural lapse, but the compliance has been followed. But if it is better to mention under import of service instead of mentioning under ISD, because of the fact that ISD credit of the particular credit which is reflected in the portal, ITC from ISD, I believe will be automated based on the distribution of ISD going down the line. So I don't think that there will be a problem, but there will be a procedural lapse as to why you are distributing cross charge. If you have an ISD registration, instead of because I know the mechanism is same, there will be no ITC element distribution, but there may be a procedural lapse issue in respect of the distribution mechanism.
But this 199 circular, allows to distribute these third-party services either through ISD or through cross-charge. So will there be any problem in distributing through cross-charge, notwithstanding the fact that they hold an ISD registration? Because the 199 gives the leeway. It is not 485. Let us say in import of service, it has to be punched, and it is punched there. Now the point is, will there be any ramification? Because they have adhered to Rule 39. They have to punch in 4A4 instead of 4A2. In my view, as what Shravan told, see, they have religiously adhered with Rule 39. This is like they can protect in either way. That is what these corporate companies are following. If at all, tomorrow department comes up and says, this ISD, they have to distribute only through ISD, they shouldn't have distribute through cross-charge. They have religiously complied with Rule 39, and not distribution through ISD registration is a procedural lapse. You have several judgments in service tax saying that, failure to distribute through IS or taking the ISD registration, but in effect, they have complied with the procedures of Rule 4, Sub Rule 7, Rule 2M, sorry, Rule 2M of SENVAT credit rules and Rule 7 of the SENVAT credit rules. Then, it is to be considered as a procedural lapse, and distribution should not be, put into stake. So this is what, even if they say this has to be distributed through ISD, they still have, in all fairness, they still have a point to make. That is the reason why I believe this corporate companies follow this kind of a strategy. That is what I understand. Distributing through cross-charge will not have any ramification in my view, because the option is open now as per Circular 199. So this is the point which I want to bring. Point number 6, there was some opening balance of ITC of IGST.
Ashwin, just one small point.
Yes.
Recently, I was handling one audit where the authorities has raised a question saying that where is the supply? What kind of supply you are providing? It is not a supply, so whatever cross charge you have done is not appropriate as per the law. Any tax collected in the name of GST should be deposited, and the recipient will not be eligible to take a credit because there is no supply.
Correct, sir. Sir, your point is taken. That is the other way the department can say, but their own circular, it goes contrary to what is there. And in fact, to discuss this cross-charge point, as you rightly mentioned, there should be a supply of service to do a cross-charge. Here they have received the import of service. It is just a common expense across all branches that has to be distributed only through ISD in all fairness. When the ISD route itself is optional, as per the existing provisions of the law, 261 does not say there is a liability to distribute through ISD. If I decide to distribute through ISD, I have to take a registration as per section 34 and do it. And department also has given the circular as per 199. You can rely upon and probably try to defend the case here. That is what I would say. And if at all the department still apprehends, they'll be going against their own circular. That will be my point. And second point, if the circular, even if it is assumed that it is contrary to law, it has to be challenged before Supreme Court, and the circular has to be struck down as invalid. Until then, it will hold its will because it's a beneficial circular. That is what I would say.
Zinji, the query which has been raised regarding what are the nature of the services. Let's assume, am I audible?
Yes, sir, you're audible.
Let's
Yes, sir.
assume that they have used partially credit of the goods and partially credit of the services to discharge the invoice which has been raised for cross charge. And then in the hands of the recipient, the department raises a question that what are the nature of the services. Then in that case, the circular would not be applicable because partially the credit of the goods has been, inputs has been used, not only services.
Understood, sir. Sir, if, as you rightly mentioned, if it involves the combination of goods and services, that is what you're trying to say, Arpit, sir.
Yes,
Correct,
yes.
sir?
Yes.
Yes. Then, as you rightly mentioned, the burden is there to prove. But what if only the services are distributed?
Yes, in case of services, I totally agree. But let's take this question that invoice has been issued by the head office to the branches and partially credit of the goods has been used and partially credit of services. Can it be challenged in the hands of the recipient that the credit would not be allowed because there is no service? Or the department has to go back to the supplier and then check at his hand and then challenge in the hand of the recipient.
Yes, sir. Sir, here my takeaway will be like this. To do a cross charge, see, first, what can be distributed only through ISD is only the input services, not the goods. And when they are doing a cross charge, as per section, at least for time being, because I also have one more view which I want to ask everyone. That I will pose as a second question. The first question is, if there is a cross charge as per 7.1c para 2, it says both supply of goods and supply of services. There should be supply to do a cross charge. Agreed, sir. If there is no such supply, where both goods and services are distributed, probably they cannot take the shelter of 199, and here the department's apprehension would be valid. Be that as it may, I have a larger question which I just want to pose to all the thought leaders who are present here. Whether the GST law, whether Article 246A gives the power to frame or to say something as deemed supply and tax it. Why I'm asking this? I know I'm digressing, but I just want to ask this. Article 366(12)A says GST is a tax on supply of goods or services. And 7.1c is probably, it's nothing but it's a deemed supply, it's not a supply, where the consideration is absent. When GST is a tax on supply, it is not a tax on deemed supply. Let us say supply in commercial sense, if it is understood, or whatever the pre-GST laws, whatever we take, let us take any service tax or excise. Consideration is something quid pro, it was quintessential. So let us assume supply means in commercial sense, it has to, consideration should be there. And GST is a tax only on supply, not on a deemed supply. Can Article 246A gives the power, or can the parliament or state legislature frame law which is not a GST in all technical sense? Can you understand the question raised, sir? GST is only a tax on supply. It is not a tax on deemed supply. Supply, if understood in commercial sense, consideration is required. And Article 246A gives the power to frame law which is a GST, goods and service tax. And goods and service tax is not a tax on deemed supply, it's a tax only on supply. Can the deemed supply provisions be challenged? Is what the next question which I just want to ask today. In a different context, in the litigation issues, I just want to discuss. I felt it would be relevant to ask this now. I just want to have your thoughts on it.
So I'll just share my thoughts on this. If you look at the section 7, if you look at it, the word deemed supply per se is not there. So if you look at section 7, it says supply includes the following. So the conventional meaning of any inclusive clause is that it goes over and above the conventional understanding. Whether there's competence to do that, that's another issue by itself. But if you look at the definition or the scope of supply per se, it says supply includes. And yeah, we have enough number of precedents also which say you can through any deemed provision, not only here, but also we had the concept of declared service and service tax and the central sales tax law also. So where the powers were given to the government, and as long as the law is valid, the power is there to include even those falling outside the conventional meaning. So this is one take on it, one aspect of it. So probably yes, yeah. So other views are also there.
So the question translates, or it essentially condenses to fact that how to understand the interpretative clause. If the interpretative clause is to be given a restrictive meaning, then then the supply, and if it is understood in a commercial sense, consideration becomes quid pro quo, or it becomes a quintessential thing to call something as a supply. Where you require a wider latitude is to be given to the word supply, then in such case, then as what Saravana Prabhu sir says, supply encompasses everything. That is an act of providing something itself is a supply. There is no requirement to look into the term consideration. So therefore, deemed supply provisions can be framed. How to understand the interpretative clause is the point which I just want to ask here. Even I have not made any set positions. I'm still into the process of understanding it.
So Ashwin, I'll just
reading-
add one more point. Sorry.
Yes.
Yeah, please finish. If I
Yes, sir,
can.
please. Please, sir.
So I would probably draw parallels not only with service tax, but if you look at the concept of transfer when you come to Section 45 of the Income Tax Act and capital gains. So there are also situations where even extinguishment is also covered as part of transfer.
Okay.
So, and this has also been challenged in enough number of case laws and it has been consistently upheld. So just
Correct.
adding one more point.
Yes, sir. Wonderful. Even yes, and I think this point also came up before the Supreme Court in one of the judgments where it is being in the GST law. I'm not able to recollect the citation. It is said whenever challenging the constitutional validity of a provision is like blocking it the pulse on. It is not that easy thing to do because generally when a parliament frames a law, it is assumed that it is not 246A is not a it's a specific entry, it's not a general entry, and the powers are writ large that is given to that is there for the Article 246A. This is what is held in one of the judgments. I'll recollect the citation and I'll tell you. If that so be the case, where wider latitude is given, then probably this point cannot be sustained. Just wanted to know anything interesting that comes out of the thought leaders who are present. I posed this question. Now, moving on to the next point. There were some opening balance ITC of IGST of rupees 50 lakhs pertaining to various expenses, excess lying unutilized in normal registration. The corporate office cross-charged the same to ISD registration and proposes to distribute the same as business support services from corporate ISD registration, that is through ISD route. So the facts are like this. See, they have some excess balance in the normal registration. From there, they are doing a cross charge to the ISD registration. And from ISD registration, they are distributing across all branches. Some of the various expenses, which is lying as an opening balance. Can it be done so like this? Can there be a cross charge between normal registration to ISD registration? The objective is to distribute through ISD route across all branches the opening balance which is lying unutilized in the normal registration. So yes,
Can
the
be
question
made
is
because
yes,
it
sir.
can be made because there is a specific insertion of rule from 23rd January, wherein they had said that a registered person having the same PAN as an ISD may issue an invoice as the case may be a credit or debit note to transfer the credit of common service to the
Wonderful.
ISD.
Wonderful. Wonderful. The point is, surprisingly, I agree, sir. Rule 54 sub rule 1A inserted from 23/1/2018. But I would like to draw parallels to JSW Energy decision. I'll share. I have my PPT. So here the Supreme Court has wrapped them on the knuckles for distributing through doing a cross charge to the ISD route without receipt of inputs.
The primary condition is that the 50 lakh is the eligible credit of common services which has to be distributed.
Correct.
It is not any other credit which has been distributed in the garb of cross charge or ISD.
Understood, sir. Understood. Here the fact is, if at all, if it is a common service, I understand it can be done so. But if it is an opening balance lying unutilized, where there is no support services which has happened for doing this kind of a cross charge, they have distributed under the guise that there is a support service. See, facts are like this. JSW Steels, Mumbai, it has one ISD registration. Odisha, they have taken one mining contract and they have taken a registration in Odisha. They have taken a registration in Odisha. And there were some, after the contract, there were some balances lying in the JSW Odisha's registration. From there, they are cross-charging it to Mumbai ISD registration. And from there, the distribution is happening across all branches. The apprehension of the department is, can there be a cross charge here? An opening balance which is lying unutilized. Can it be cross charged? And the cross charge is done under the guise that there is a support service. What is the support service? The High Court is trying to, introspect, but there is no such support service being there. And High Court makes an important observation. It says, since no such supply being shown to have been made by JSW Steel Limited of Odisha to JSW Steel Limited of Maharashtra, no prima facie case is made out by the petitioner. This transaction in question prima facie amount to siphoning of funds. This is what tax amounts. This is what the courts have held, and they have dismissed the petition. So in this backdrop, whether this cross charge will be declared legal or illegal, where in my view, if you are going to resort to Rule 54 Sub-Rule 1A, the ostensible purpose of bringing Rule 54 Sub-Rule 1A is a curative rule which has come, where in the initial years, the vendors, because of the registration being given, they distribute the credit to normal registration instead of to ISD registration. There were some problems. For that, this Rule 54 1A was brought, where they can do a cross charge, that too within same state, and that too within the same state and belonging to same pact. Then only Rule 54 1A will apply. So in this backdrop, can this opening balance which is lying unutilized in the normal registration, can it be cross-charged? Is the question. So I am of the view, going by JSW Steels, there might be some problem, because there is no support service at all. So if that so be the case, then this cross charge might be declared illegal, as what Arpit Ji told. However, this judgment came before 199 circular. Can now resort to 199 circular be, can we take asylum of circular 199 and say both are going to give the same results? Had I not distributed, I would have distributed this through ISD route. Can I resort to circular 199 and take the protection?
In my opinion, Ashwinji, how 199 has to be seen, that if a person is eligible for transfer to ISD, it can be made through cross charge. But not the reverse case, that if the person is not eligible through cross charge, it can be made through ISD. This is how the circular has to be understood.
Understood, sir. Understood. So the point, where it is possible, the distribution is through ISD, then cross charge will not be put into question. Where it is not possible to distribute through ISD, cross charge will be put into question. So this is the point. In my view, the circular 199 should not apply to this scenario, and this transfer of opening balance lying unutilized will create some ramifications, if at all the department finds this factor. Monthly retainers for social media marketing and branding the products, customer support online, was distributed to all branches. See, this is a very simple point. So though that particular expense attributable to that particular to that GSTN has to be distributed only to that GSTN, not to all branches. The social media marketing, branding, all these things are, as per the facts, is taken care by the 24/7 division. So therefore, the distribution should not happen to all branches. The distribution should happen to only to that 24/7 division registration, which is the Bangalore centralized registration. There, this distribution has to be done. Now, what is if there is an excess distribution going by the facts? Now, this question comes to the taxpayer takes cognizance of this fact, it has been wrongly distributed, and they want to give effect to the wrong, whatever they have committed. They want to rectify it. They are issuing a credit note. Now, the point is, which I would like to ask, can there be a distribution which is happening to all branches? Can the credit note be issued? And what is the time limit for issuing the credit? These are the two questions which I want to ask. There is an excess distribution which has happened.
Yeah, actually, I think we can transfer the grade. That should not be a problem, because the benefit is being received by across all the branches, right?
Okay, so you mean to say that it can be distributed to all branches because there is a perceived benefit to all
Yeah.
branches. So if that so be the case, there is an linkage which you are trying to bring, sir, correct?
Yes.
That other branches are also getting benefited. But going by the facts, you know, this 24/7 division works for the pharmaceutical product sales of holding company.
Right.
So if that so be the case, how the all other branches are getting benefit?
Okay. So you're saying it's only for the
The holding company alone. So I'll here the facts are like this. They work for 24/7, provides an e-commerce platform. This totally confused private limited to pay 2% of online sales at lead generation fee for direct sales to customer. So through this e-commerce platform, who is getting benefited is the holding company.
yes.
So if that so be the case, can the distribution through ISD happen across all branches?
Okay. Since it's being done by
By the 24/7.
24/7.
Yes, sir. Yes.
But again, it's
So
about marketing and branding. No, so branding can also be taken up by the TCPL. No?
correct. Sir, here one more aspect to look into it. Yes, this distribution to all branches can be justified in one way. What is that? See, since I understand this e-commerce platform, the sales are given, the direct sales to customer. Yes, who is directly benefited is holding company. But holding company to get the benefit, moment when the holding company has to do higher sales through this additional platform or an additional supply happens through this additional platform, this pharma product supplied by the pharma company also gets increased.
Yes. And
So
there is this concept, of ATL and BTL, no, above the line, below the line. Say if I'm selling a laptop, say
yes,
I'll not take it, say I'm taking a brand, say Lenovo. So I'll have to do the above the line marketing wherein the brand gets recognized. So that is being done by TCPL, right?
yes,
So
sir.
this retainer, the monthly retainer, whatever he is doing for the social media activities, that is helping in the brand recall of my products. So that's
Understood.
why by that logic, I can distribute the credit to all the branches.
Understood, sir. Understood. So if that so be the distribution is to be done to all branches, then there is no ramification. What if the distribution is not to be done to all the branches? My objective of taking this question was on two folds. One, is there any time limit for credit note to nullify that excess distribution? You have to issue a ISD credit note. Now this ISD credit note is bound by section 34 time.
Right. Yeah. See, last day we had this discussion that, wherein we are saying that if it is not shown in table 6A, okay, or it's not being shown, whether the ISD invoices are not being shown in my GST or 2A, whether I can avail the credit. So the
Yes,
logic
sir.
was said that even the ISD invoices are invoices per se.
Correct.
Right. So going by the same logic, I think credit note will also fall under the same conditions or restrictions that other credit notes have.
Understood, sir. So you mean to say section 34 binds even the ISD credit?
Yeah.
Yes, sir. This is one way to look at it. The other view that one
Yeah, we
can
can see if there are other views. Yeah,
Actually,
yeah.
Rule 54 also provides for issuance of credit note if ISD intends to issue.
sorry, sir.
Rule 54 also provides for issuance of credit note if the ISD intends to issue a credit note. So
Correct, sir.
whenever a credit note has to be issued, it has to be issued under section 34 only.
Okay. Okay. So 34 subsection 2 will apply. Is the the time limit under section 34 will apply. Is the view that is being canvassed. But the alternate view can be take like this. Just wanted to. Section 20 stands it's a self-contained provision in the sense you need not resort to the other provision because section 20 is a peculiar section. It seeks to do a distribution of credit only. So since it seeks to do a distribution of credit, which is standing out from the other sections where 16 speaks about entitlement, 17 about partial credit and so on. When section 20 stands out from the other section, If the time limit is to be given, it is to be given in section 20 read with rule 39. If it is not given, then can I say I can issue the credit note anyway? This is one way to look at it. Other way, because by issuing the credit note, I am also trying to nullify the wrongful act that is done, or a wrongful irregular credit that has been distributed. So this is a procedural lapse. The time limit should not be viewed very seriously. Can there be another argument or other way to look at it?
See, what can be another argument is that when I read through section 20, it says
sir.
the input service distributor shall distribute the credit of central tax and central tax or ISD or integrated tax and integrated tax central by way of issue of a document. It does not provide for issuance of an invoice.
Correct.
So section 20 is only providing for issuance of a document. And when I read through section 34, it says issuance of an invoice.
Correct.
So section 20 vis-a-vis 34, we see it speaks about document, not an invoice. Although rule 54 speaks about invoice, so we can make an alternate argument that rule is going beyond the section and providing for issuance and invoice where there is no such condition, just like we argue in case of import of goods.
Yes, sir. Wonderful, sir. Is there anyone would like to canvass this view?
Arpitji, why are we focusing on document when we can simply say that 34 restricts itself only on conditions where there is an underlying supply that has been made against to which a credit note is being offered. So that per se does not apply to an ISD who just takes and distributes. So we cannot say that 34 is a parent section from which 54 derives its powers from. So 54 for the purpose of credit notes for ISD owes its parentage to 20 and not 34.
Yes. Yes, rule 39. Yes, the powers are derived from section 20. So that is what even both translates to the same meaning. That is what I understand. What Muni sir and Arpit sir say, they have put it in different way. That is what I perceive.
And Rule 36, for that matter, also explains what are the documents on which ITC can be taken. And one of the documents which is an ISD invoice in itself. So the view that the document is mentioned in section 20 is duly backed by an ISD invoice by way of Rule 36. So whether that view will have weightage or not is something which we have to discuss, because the document means an ISD invoice by way of Rule 36 for distribution of ISD. So obviously,
Rule
because
36. Rule 36, 1E says input service distributor invoice and input credit note or any document issued by input service distributor in accordance with provisions of Rule 54(1).
Or any document issued by input service distributor. So if they are issuing an invoice, then 34 will be applicable. Or if there is any other document, then 34 time limit is not available, right? So that is what you are trying to argue.
Yes, because 34(1) it says where one or more tax invoices have been issued.
Okay.
Adding what Uniji has said, where one or more tax invoices are issued for supply of goods or any services. So 34 is attaching tax invoice with the supply of goods or services. So if there is no underlying supply of goods or services, there would be no tax invoice, and when there is no tax invoice, section 34 would not be applicable.
Understood, sir. Now also 36 is a rule for document only for the purpose of what are the documents through which one can avail the input tax credit. That is to be looked from a recipient's perspective. The issuance of credit note is to be looked from a supplier's perspective. Can that 36 be drawn as an analogy to say 34 will apply here? So that is also another point which just is coming across very well. Yes, be that as it may. Now I'll move on to the next point. Besides the above, for the financial year 17-18 to 21-22, GST audit under section 65 was conducted across all registration. In the course of audit, the department has raised following apprehensions. ITC of ISD taken by Andhra registration, that is of the pharma division, was questioned. It appears to the proper officer of the Andhra registration that even some ineligible ITC would have been distributed as ISD ITC. And the demand the working, say that basically they are demanding the working pertaining to the ISD registration. On the initial rebuttals to the allegation that the PO has no jurisdiction to demand the ISD registration related working, the proper officer is getting frustrated. is proposing to issue an SCN for huge distribution of ITC of 20 crores for all the financial years. The cause of action comes from section 155. It is saying that the burden of proof is on the taxpayer to the recipient. It is the recipient's duty to prove that his credit is eligible. Can the department propose to? Can the department, see, there are two questions here. Can the department assume the fact that there will be some ineligible ITCs that are distributed? Question number one. Question number two. Can they demand the workings of ISD registration? So these are the two questions which is open for discussion. Yes, friends.
Ashwin, if we go by
First-
the if we go by the law strictly, then the recipient state's proper officer does not have jurisdiction over the distribution of the credit, whether ineligible credit was given or not. So that's what we have been a few matters, about three matters, we have been asked to actually give the list of back-end invoices based on which ISD invoices have been issued on.
Understood, sir. So this is a practical, pretty much a practical question, which comes during the GST audit.
Ashwinji, let's-
This is regarding investigation which is going on for other
Yes.
matters, for some stock shortage. So during that time, they're telling us that now the ISD credit that has been transferred, give us entire breakup as to what ISD has been transferred. So we took a stand that being a recipient, I am not in a position to know what invoices have been credited to me. It's outlook of the distribution state. Their proper office has to look into it whether ineligible credit has been transferred to me or not.
Wonderful, sir. Now there are two questions here. First, can there be an the first argument or first question is can a demand be proposed based on assumption? Because the language of 73 says, let us say the notice is issued under 73 as you. It appears to the PO as the language that is there in 73. Not the word reason to believe. The appears to PO is of a lower threshold compared to the word reason to believe. Now, still, it gives the free sanction to the department to issue an SCN that they are doubting. It is purely based on their assumption, based on their suspicion that there will be some ineligible credits which the recipient would have taken. So 73 gives the jurisdiction to issue this kind of a show cause notice. One. Second question is there an inherent lack of jurisdiction on the part of the proper officer of Andhra registration to question the ISD workings? So to answer the first question, appears to PO is a word of lower threshold, although it should be based on the material facts only they can issue an SCN. Simply based on suspicion, however grave, cannot substitute evidences. Suspicion, however grave, cannot substitute evidences. So the point is, without any material fact, simply based on some suspicion, the department cannot issue show cause notice is the legal standpoint that one can take. Second point, is there any inherent lack of jurisdiction to question the workings of ISD registration? In my view, yes, it appears as what Arup ji told. I am of the view, if at all they require, they can request the proper officer of that ISD registration to go and verify the workings of ISD. They cannot come and ask is the view which I would like to canvass. But this is not going to end at the adjudication level, is what I perceive based on my experiences. Second point, for Tamil Nadu registration of Pharma Division, which is an SEZ unit located in Tambaram MEPS, has taken refund of ISD credit distributed.
Ashwinji,
Yes, sir. Yes, sir.
I would like to take the point which you have raised.
Yes, sir.
Just a small thing. Whether credit of ISD, which has been distributed, is at all an input tax.
If at all an input tax.
Is it at all an input tax? If I read through section 2, clause 62, input tax in relation to a registered person means a central tax, state tax, integrated tax, or union territory tax charged on any supply of goods or services of both made to him.
Understood, sir.
And includes IGST on import of goods, 9394, 5354,
Yes.
9394 UTGST, 737 UTGST, but does not include tax freedom. So ideally, the credit which has been distributed through ISD is not an input tax.
Wonderful, sir. Since you
So
brought
when
this
it is
point,
not an input tax, so section 16 would also not be applicable.
wonderful,
Because,
sir.
because
Yes.
if I go through section 16, it says every registered person shall subject to such condition as may be prescribed in the manner be entitled to take credit of input tax charged on the supply of goods. So when I am distributing credit through credit, so ideally it should not go through section 16. It should go through section 20.
Correct,
For
sir.
credit
Wonderful.
to be distributed, it has to be through 20. It is not through section 16(1). And
Understood.
when I go through section 20, section 21 provides for manner of recovery of credit distributed in excess.
Correct.
And if I go through section 155, which
Yes.
places the burden of proof.
Yes. Yes, sir.
It says where any person claims that he is eligible for input tax credit under this act. So once it is not an input tax, 155 is also not applicable. And if at all any recovery has to be made, it can be only made under section 21 from the person who is distributing the credit, not from the recipient.
Excellent argument, sir. Excellent. Sir, at this point, I have brought in the previous class also, the similar discussion came. So I have brought the arguments in favor and arguments against matching. Both, I believe both stand on the same footing. Whatever you have told, I have also taken some arguments in favor and arguments against it. That is whether matching with GSTR 6A is mandatory. Why this question essentially translates to the fact whether 16 should be complied for distribution as through section 20. That is the question which is there, which is the point which you also discussed now. I have brought some arguments in favor of matching. Why the matching should be done? Their reliance is basically based on 16.2 AA. Yes, 16.2 AA, in all fairness, whether it is applicable, on reading literally, it seems, yes, it is applicable because, supplier has to file GSTR1. And moment he files quoting the ISD registration, the credit will come and sit in 6A. So therefore, 16.2 AA is applicable. That is, there is no restriction or there is no impossibility that is there. So 16.2A is applicable. Only on entitlement distribution is possible. Section 39 employs the word ITC. Although section 20 uses the word, as you rightly said, tax charged, credit of tax charged or paid on the input service is the language that is there in section 20. Section 39, across all the provision, it employs the language ITC, input tax credit. But whereas section 20, it is peculiar to note, it does not use the word ITC. It uses the word credit on tax paid on the input service. I feel there is a marked distinction between the two. The credit of input tax is nothing but, there is no need to look into section 16 at all. I'll rest my arguments. These are the favorable arguments that have come for matching. For arguments against matching, section 20 is a self-contained code. To distribute the ITC, the ostensible purpose of 20 is to distribute the ITC, not to take help of the other provisions. Entitlement is to be seen only when such amount taken and it is utilized. Section 2 clause 62 defines credit of input tax as an input tax credit. Credit means it is a benefit or an advantage. What I distribute benefits the recipient, as simple as that. And Rule 39 allows to distribute even ineligible ITC. So there is no need to look at what 16 should be satisfied. Then only I have to distribute. The language of Rule 39 says where the credit is ineligible under 17.5 or otherwise is the language. So therefore, even if it is otherwise ineligible also, it has to be distributed. When ineligible credits are also to be distributed, matching with section 16, those things will not apply. When 16 will not apply, as you said, the section 20 uses the language credit of input tax paid or charged on the input service as opposed to the word ITC. So 155 should not apply is what I would say. And also Rule 65 uses the word wherever required after adding, correcting, deleting the details is there. So therefore you are allowed to add some of the invoice, whatever it is not, even if it is not there in GSTR 6A. So I would go with arguments against matching as opposed to arguments in favor of matching. Since the point has some correlation, I just brought this point at this juncture. Yes, sir.
Yeah, I will put on the revenue stat and say you have to apply 16. Definitions cannot stand on its own. Section 2 itself has a provision that everything has to be read contextually. So you cannot read input tax credit in isolation. You cannot read section 20 in isolation. You cannot read 21 in isolation. So you have to contextually read ITC in harmonious construction with 16 and 20. So there, otherwise the whole purpose of an ISD invoice and the relevant rules will go away. You can do whatever you want in a system that is directly into the GSTR 6. There is no requirement for an ISD invoice itself. Rule 36.2 doesn't become, 36.1 does not become effective. So it has to be harmonious construction of 16 plus 20 plus 21 plus 262 plus 263 plus 73 plus 74, which will gives the overall picture as to how the manner and recovery of an irregular ITC can be taken. Only thing is, there could not be a challenge. There could be a challenge to the jurisdiction. They are not supposed to challenge the manner of distribution. They can simply take it, and only if there is enough other than over and beyond a suspicion that something which should not have been transferred has been transferred, they can go into a further verification. But without that, a question of jurisdiction remains. But to bar them at the door on other than jurisdiction, saying that it is not ITC at all, defeats 16. So I would say you have to read it as contextually and it should be harmoniously interpreted.
Understood.
What we have to see that they have provided section 21 under the head of 16 with 21.
Correct.
If it would have been a recovery for irregular, it would for recovery from the supply, it would not have been under 21. It would have been found somewhere in other section. And section 2 clause 62 uses the term means and includes. So the
Correct.
onus would be on the revenue to say that when section 2 start with it has to be read in context. So why 262 has is not in context with section 16, because it will be a very big challenge that section 2 clause 62, which defines input tax, is not in context of section 16.
Understood, sir. Now, can I go for the next point, sir?
Yes. Yes.
For Tamil Nadu registration of Pharma Division, which is an SEISM unit located in Tambaram MIPS, they have taken refund of ISD credit. See basically what has happened. This Tamil Nadu registration of Pharma Division is an SEZ unit. It does the export of pharmaceutical products. ISD credit has been distributed. Now the proper officer is of two views. One view I've brought here. I will also add one more view here. The proper officer is of the view, again, there is a tactful dilution of eligible and ineligible credit, which may lead to loss of revenue. What instigates on the part of the proper officer to question the refund is there might be a genuine fear that there might be a loss of revenue. One thing. And second thing, which I would like to add, which is not present here, the proper officer takes a stand that the recipient cannot take the credit of, cannot get the refund of ISD, ITC, because the SEZ is a recipient unit. It takes the refund as an ISD. He's taking that stand, let us say. Now the point is the proper officer's argument will hold its feet. Again, 155 is saying the burden of proof is on. In my view, this point I brought to cover the Britannia Industries judgment. And also the second point is, again, I've been telling, the Britannia Industries judgment, the facts will go like this, the same facts, where the recipient SEZ would have taken the ISD credit as refund. The department's counter submission will be on 3-4 fronts. It would say that, there is no mechanism or circular or anything that has been devised. And he is not the supplier, he is the recipient. And recipient is not allowed to take the credit. He is not allowed to get the refund of ISD credit. So these were the stands of departments. A pretty simple case, Rule 89. The Gujarat High Court held in 2020 that the supplier is not defined. In the context, here he does the export and pretty well he is entitled for refund. There is no distinction between the ISD credit and ITC here in this judgment of Britannia Industries. Just want to bring this point here. So one can place the reliance and try to defend the case. Now, the interesting question, last two questions are pertinent, interesting questions. An overzealous previous consultant of Gujarat registration, this point is having a ramification on code of service. I told he has punched it in 4A2, or let us say in 4A5, all other ITs. Now I'm tweaking the fact. He's doing a cross charge for the import of service. And while taking the credit, since he has complied with Rule 39, the overzealous consultant is punching it in table 4A4, that is as an ISD credit, only on account of the fact that he has complied with Rule 39. Now the department raises apprehension. Boss, this credit has not been distributed through ISD registration. Then how do you say it is an ISD credit? The company is countering, sir, even though it is not an ISD registration, I've religiously complied with Rule 39. What I intend to take is through the ISD only. So that is the reason I have punched in. Anyways, the credit is eligible for. Now, can the department raise an apprehension and proceed to deny the? Yes, sir. So my answer is no, this is just a procedural lapse. And also you have a service tax judgment. That is what I am saying. Even if the distribution has not, yes, section 20 makes ISD registration mandatory. If you are, sorry, section 24 makes ISD registration mandatory if you intend to distribute as an ISD credit. If you intend to distribute as an ISD credit, it is mandatory. But the point is, now he has not taken the ISD registration. That is the sole reason for department to deny the credit. But however, you can place judgment from service tax, which gives the relief, even though the registration has not been taken. If it has been procedurally complied, then this 4A4 is also valid. That is one way to look. Other way, even if it is not a 4A4 credit, it is a normal credit or a 4A to import of service credit. Anyways, ITC is an ITC, is eligible for it. Just because punching it in the wrong column cannot deny the department cannot proceed to deny the credit. This is the other way to look at it. So this is what I would say. The last
Just
point.
a doubt.
Yes.
This is not only for ISD, but generally, whenever we place reliance on service tax judgment, there is a advantage that we have that at the end of the day, service tax was a central law, and wherever in India service tax laws were applicable, it was the same. But when we are moving into GST, should we rely upon case decisions only when we are sure that ultimately the revenue and settlement aspect of it also remains the same? Or whenever we place something, we have to just adopt that ratio as such?
Yes, sir. Sir, I will, my view will be like this. There is one judgment of Kolkata High Court. The judgment is Bimal Junjunwala, if my memory sounds correct. So there are two aspects. The question, you have two questions here. Can I rely upon service tax judgment? The answer is yes. Bimal Junjunwala allows to rely, where it says the ratio goes like this: in absence of any precedents, one is entitled to rely upon the previous judgment, which inter alia is a service tax judgment in that facts. Now the question is, you have brought one more element to it. That is, my settlement is getting affected on account of these things. In that way, whether this reliance will make a marked departure, honestly, I am of the view settlement is something that is happening backward. For that, the taxpayer should not be penalized. In a very layman understanding, I'm speaking. So the taxpayer should not be penalized for the settlement, which is going to happen at back end. Is the government has to take care of all these needs. So the taxpayer should not allowed or should not be asked to carry that burden. So that is what I would say here. Now coming to next point. Learned Audit Authority. This is an interesting point, which I just know last 3 minutes more. I'll conclude with this. The Learned Audit Authority has brought an allegation. That is, what is the allegation? Goes like this. See, I'll explain through the business model. See, pharma division is there. It is supplying the pharma products to Totally Confused Private Limited, which is the holding company. Only to holding company it supplies. And 24/7 division is created now, recently. Centralized registration, all the expenses are incurred. E-commerce platform is provided. And all the sales for the Totally Confused Private Limited across 21 registration is taken care by this 24/7 division, which is a single registration. Now, this is an additional line of supply for Totally Confused Private Limited. In addition to supplying through all the registration, this is an additional line of supply. For making this additional line of supply, this sourcing has to be done from whom? This Totally Confused Private Limited has to source from pharmacy division. Since there is an incremental sale happening to Totally Confused Private Limited, there is an incremental supply by the pharma division to the totally confused private limited, and cross charge has to be done because there is a perceived benefit which is happening to this distribution. That is from 24/7 division. The cross charge has to be done to pharmacy division because there is a perceived benefit which is happening. This is department is trying to create this kind of a linkage. And valuation mechanism goes by Rule 31. Whether this is allowed or not. Can they take some kind of is a direct benefit or an indirect benefit? And a quantification mechanism is given. The marketing customer support expenses plus 10% markup is added, and GST of 99.99 crores is demanded to the Bangalore registration. Can it be done so? My point is, yes, department prima facie has a case because there is a perceived benefit which is there. And if they adopt to Rule 31, that is 28 to 31, 28, 19, 30, they go to 31. That is, they have tried to determine the value as per the arm's length price. They have taken some reasonable means here. So if it is proven, then probably department has a case to make. That is what I would like to say here. With this, friends, I made a very earnest attempt to understand. 1 more minute left, so I just want to add one more point on 122.19 versus 125. Arguments in favor and arguments against. Here I have to revisit the position. I told 125 would apply to my mind, I told. But prima facie, again, on reading what is contravention, I went to do some research, meaning of the term Ramanathan's law, IS law lexicon, which defines there is a failure to comply with any legal obligation, it can be termed as a contravention. If it is a contravention, then on a literal reading, 122.19 can be applied. But our arguments in favor would be too far-fetched. I've taken some basics of penalty. Penalty is only for tax delinquency. That is the basis of penalty for any civil obligation. Penalty for tax delinquency is a civil obligation, remedial and coercive in nature. And also contextually, if you read 122, first 1 to 8 clause covers some kind of a tax defect. Where ineligible credit is not distributed, there is no tax defect at all which is happening. So therefore, 122.19 cannot be applied is the way the taxpayer can argue, which will be a far-fetched or which will be an argument that is to be tested before Supreme Court, not before the officer. Prima facie, an officer has to case to make under 122.19 is what I would like to conclude. Thank you all, friends, for your patient listening. I hope I have made some value addition. Thank you.
Yes, Ashwin, it was superb, amazing. This is the kind of evaluation that we had, and the best part was that a lot of our members joined in and chipped in their views also. So that actually helps in the valuation to a larger extent, because then you get different perspectives also. So with this, I would request, I think Arpit ji to offer a vote of thanks to Ashwin ji today.
Thank you very much, Ashwin, for the enlightening discussion on ISD and the various issues which have been raised. And as always, the participation of all the members have made it more interesting, and the manner in which all the queries were summarized by you in one case study and all the issues, whether on the part of the person who is distributing or the person who is receiving the credit, and how the terms have to be understood. It was in such an enlightening session, and ISD as from the starting has been issue of contention, and as correctly said by you, 199 circular has been issued, which has only made the things more complicated, and further the amendment which has been made through Finance Act 2024 would not be simplifying the thing, but would be adding more fire to the ongoing issue only. That what are the common services which can be distributed and what cannot be distributed as a common service. So it's a burning issue, and all in all, favorable situations for the professionals in the coming years. And thank you very much for such an enlightening decision, and look forward to your participation in the coming months on various other topics. Thank you very much, and thank you to all the participants for attending and giving us the boost up to organize these SMSs on every Saturday, because as more and more participants would join in, more and more discussion would take upon. And as we have seen that the level of discussion and the point which we are raising, not only from the perspective, literal reading of the interpretation provision, but also the interpretive part of the provision. It only adds to our knowledge. Thank you very much to all the participants and the speaker. Thank you all.
Thank you.
Thank
Thank
you.
you, sir.
Thank you, everyone. So we'll close the meeting. And Ashwin, thank you once again
Thank you. Thank you,
for
sir.
for all the. Thank you, everyone.
Thank
Have a
you, sir.
wonderful weekend ahead. And so we'll end the meeting here.
Thank you.